Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS and ESS BASIP. Welcome to Accountants Minute. Accountants, are you ready for the next level? There's no doubt that the accountancy marketplace is changing, and this is causing fee slippage. What's caused fee slippage to occur? The Australian Taxation Office changes are probably the headline act, but there's also the commodity status that many aspects of tax return preparation, especially for wage and salary earners, the outsourcing of work to countries overseas which have a cheaper cost of operations, competition from accountants who have already responded to the changing marketplace, and to other professional organisations. And last but not least, technology changes. And technology is happening all around us. A recent report by Times Higher Education indicated that the accountancy profession was one of the highest in the world to potentially be losing a significant amount of jobs over the next decade from technology. In fact, that report indicated that 95% of jobs have got the potential to be automated. What does that do in your accountancy business? All of these changes. Have you thought about the potential fee slippage that is occurring in all accountancy businesses in Australia? I recently evaluated the benchmarking.com.au report on the accounting industry for 2016. Benchmarking.com has utilised a terminology for an average accountancy business as the all firms average. And if you haven't read that report, I would commend it to you. There were 465 clients in the under $3,000 fee category, which represented a very significant 77.1% of the clients of that firm. And incidentally, the all firms average firm had a turnover of $2.1 million. But let's return to the clients under $3,000. The revenue generated by this average firm was $579,000 from the under $3,000 category of clients at an average fee of $1,246. I believe the vast majority of that work would have related to the preparation of tax returns for wage or salary earners. Some of it may have related to people with property income or a share portfolio, but the vast majority, at an average of $1,246, would have been wage and salary earners. I believe that this category is the most vulnerable to fee slippage. And I've utilised a figure of 20% because that's the figure that I hear around the traps as to what changes are starting to occur in accountancy businesses. But it could have been higher, could have been 40%. A 20% fee slippage for the benchmarking.com's all fee business would have generated a loss of $115,000. If that occurred in your firm, what changes are you going to make to try to overcome these challenges to you? So let's turn now to the new opportunities, because there are new opportunities. These include debtors management review, SME debtors systems manuals, chief financial officer services, business plans, budgets, being proactive in identification of government grants that are suitable for individual clients, and personal property securities register due diligence reviews. These are just some of the products that you might care to offer to your clients. And most of these products have been identified by small medium enterprises in survey after survey over the last 15 years that they would like supplied to them by their accountants or advisors. But have you been watching the news releases in the last month or so and observed what some of the big four firms are now starting to do? Because if not, I think you should be. One big four firm has announced that they are establishing a debt advisory specialist division for targeting small medium enterprises. Hang on, aren't these your traditional clients, SMEs? Another big four firm has announced that it is setting up a specialist division to drill down into SMEs and to charge them a monthly fee, which seems rather low to me and to some commentators in the marketplace. But these sorts of things have been happening in the United Kingdom for the last few years, so why wouldn't the big four start introducing them to Australia? You might ask, what's the big end of town interest in small medium enterprises in Australia caused by? Because it seems to have happened fairly recently. I think one of the reasons might be that the crowdfunding, equity raising legislation is very close to being passed by the Senate. And you might say, well, why would the big four firms be interested in that legislation? Well, I think it's very obvious. Each of those companies that aspire to raise up to $5 million every 12 months if they wish from being a crowdfunding equity company will need a business plan, budgets and cash flow forecasts, an information memorandum. And even though the legislation says they don't have to appoint an auditor in the first 5 years, many of them will be inclined to appoint an auditor, if for no other reason than for accountability to their investors. And a number of them will be seeking accountants, obviously people with financial knowledge, to be on their board of directors, because the crowdfunding equity companies have to be public companies, so they'll need 3 directors. And one of them obviously should be someone with financial experience. I believe that's the reason that the big four businesses are becoming very interested in what's going on in SME land. Have you developed your strategy for this new opportunity? And when you combine crowdfunding equity companies with early stage innovation companies, which have been legal in Australia since July 2016, you might then grasp the opportunities that are now available for small companies to raise considerable sums of money from the public. And those companies are going to need strong financial advice. And these are out of the traditional pool of clients for the accountancy and advisory firms that I believe are interested in what ESS BIZTOOLS and ESS Bassett produce as products. So returning to the all firms average as identified by benchmarking.com.au, let's now look at the clients in the range of $3,000 to $10,000 per annum in fees. There was 101 clients paying a total of $670,000 in fees, with an average fee of $6,637. Now, I've been a full-time consultant and managing director of ESS BIZTOOLS for the last 17 years, so I'm probably a little bit out of touch in what goes on in day-to-day accounting firms' activity, but I think $6,637 as a fee for a business probably only covers the preparation of the annual financials, the profit and loss, the balance sheet, source and application of funds I hope you're producing for your clients, the company's tax return or the partnership's tax return, perhaps their business activity statements during the year, perhaps a quarterly set of financial accounts. But I can't see any of the business advisory services work being undertaken in an average fee of $6,637. So this is the group of clients that you have got a significant opportunity to work with. They are already your clients. Don't let them have to go off and talk to other people, especially larger firms, to get fairly basic accounting work undertaken for them. The next group of clients that you should analyse, I think, is the clients that are currently paying $10,000 to $20,000. And this is a very small number. It was 25 in the benchmarking.com.au review. I suspect those firms are already receiving some services which would be described as business advisory services if they're paying fees in the vicinity of $10,000 to $20,000. But I doubt whether they're receiving a full complement of business advisory services. So the challenge for you is to say, what services can we provide? Well, I've already outlined 6 or 7 products that you might care to offer to your clients. And you could then sit down and talk to them. And my summary to you today is to say, well, if you secured 30% of that 101 clients that agreed for a new business advisory service of $5,000 per annum, not much. Debtors review $2,000, SME debtor systems manual $200 to $300. Perhaps the business could go through the personal property securities register due diligence review, another $1,500. It doesn't take you much to get up to $5,000 in fees. For 30 of those clients, that would generate around $155,000. So you have offset the fee slippage that we talked about a little bit earlier. A fee slippage that I believe is going to affect every accountancy business. So if you want to protect your firm, continue to be able to offer the employment that you're currently doing, you will have to develop strategies looking for the opportunities that are available in the marketplace. I'd like to invite you to a special webinar that we're presenting on Thursday, 16th of March at 11 a.m. Australian Eastern Standard Time, 12 noon Australian Eastern Daylight Time, looking at how do you understand the potential fee slippage and identify new opportunities in your accountancy business. If you would like to receive the free document that we're prepared to assist you in identifying fee slippage and what the cost of it might be based on the facts that pertain to your accountancy business, and then to look at the opportunities that might be available to you by sitting down and developing strategies to offer a wider range of business advisory services to your clients currently paying you between $3,000 and $10,000, you can go to our website essbassett.com.au to register for the special document which we will send to you, which will enable you to undertake those calculations yourself. So please send us that email so that we can send that document to you, and please register for the special webinar on Thursday the 16th of March. Good luck with this challenge of meeting fee slippage and grasping the opportunity to offer new services to your clients. Have a great day. Goodbye.